Have you ever found yourself on the edge of clicking that buy button right after Bitcoin hits another all-time high, thinking, this is it, I can't miss out again? Well, I've been in crypto a long time, but I can still remember that feeling from my first couple bull markets. The headlights are screaming, your friends are finally asking about it, your social feed is flooded with laser eyes and moon emojis, and it feels like if you don't act right now, you'll miss out forever. But here's the truth. That's usually the exact moment when you're most at risk of buying the top. So in this video, I want to walk you through how to avoid that trap, not by trying to time the market perfectly, but by understanding the emotional patterns, historical trends, and mindset shifts that can help you make better decisions. Because in this space, patience is power. And if we're here for the long-term revolution that Bitcoin represents, then how we enter the market matters just as much as why we're here. So let's start with something we don't talk about enough in crypto, your emotions. Ready for therapy time? Because when Bitcoin starts going parabolic, it's not just the price that's running, it's your fear of missing out. That FOMO isn't random, it's a pattern. It shows up in every cycle, right when media is euphoric and everyone who ignored Bitcoin, Peter Schiff, I'm looking at you, suddenly wants in. Historically, those euphoric peaks have been some of the worst times to buy. For proof, in 2017, Bitcoin hit $20,000 and people flooded in only to watch it drop more than 80% over the next year. The same thing in 2021 when it pushed to $69,000, the momentum felt unstoppable until it wasn't. The market is emotional. It's a pendulum that swings between fear and greed. And when you're feeling that emotional urge to act, that's your cue to pause, to zoom out, because real conviction isn't built on hype. It's built on understanding. So if you feel like you're being pulled into the market by urgency or euphoria, recognize it. That's not the signal to buy. That's the signal to step back and get clear. So how do we actually spot the top of a cycle before it smacks us in the face? Well, while no one can predict exact tops, there are patterns. Bitcoin tends to peak when everyone becomes a genius overnight. Your Uber drivers giving price targets. Your high school friends are launching altcoins. And the news is running non-stop Bitcoin segments with rocket emojis and six-figure predictions. On-chain data also helps. Tools like MV-RV ratio, exchange inflows, and long-term holder behavior give clues. When old coins start moving and profit taking ramps up, it often means seasoned investors are exiting, not entering. We also look at price behavior. Historically, Bitcoin's biggest tops have come after steep vertical climbs, parabolic moves that break away from trend lines. When you see that kind of move paired with retail mania and influencers claiming this time is different, that's your signal to tighten your strategy, not loosen it. And remember, it's not just about charts, it's about behavior. If it feels like easy money and everyone's already in, you're probably late. Tops don't feel scary, they feel exciting, and that's a trap. Now that we've talked about recognizing market tops, let's shift to something more empowering: how to avoid buying at the top in the first place. The key? Patience and conviction. Too many people FOMO in when Bitcoin is making headlines, but they ignore it when it's quietly building strength. The best time to buy Bitcoin is almost never when it's euphoric. It's when it's boring. And here's a heads up, we are always posting videos, even in the bear market, so hit subscribe. Zoom out and focus on long-term accumulation zones. Historically, the best time to buy have been during bear markets when sentiment is low, 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 and the price consolidates. The 2015 lows around $200, the 2018 to 2019 range near $3,000, the 2022 bear around $16,000, those were golden windows. They didn't feel exciting, they felt lonely, and that's the point. Also, time your entries using simple strategies. Dollar cost averaging is one of the most underrated tools in crypto. It lets you buy through noise, stay disciplined, and avoid emotional mistakes. You don't have to time the bottom perfectly, you just need to avoid panic buying near the top. And finally, check your mindset. Ask yourself, Are you buying Bitcoin because you believe in its long-term role as decentralized money? Or are you buying it because someone on TikTok said it's going to $1 million next week? The why behind your entry matters more than the price. So, how do you avoid buying Bitcoin at the top? First, you stop chasing and you start preparing. In this space, the people who win aren't the loudest, they're the most intentional. They're the ones building conviction during quiet markets, not just showing up when it's trending. They learn, they observe, they wait. And when the market gives them a window, they act, not emotionally, but with purpose. You do not have to be perfect. You just have to be well positioned. And if you're watching this now, you're already ahead of most people because you're not just looking for hype, you're looking to understand. And that's the beginning of real financial sovereignty. Thank you for being here with me. If you're ready to go deeper, explore more resources, and sharpen your strategy with others who value long-term thinking, head over to learningcrypto.com. There's a community waiting for you there. See you in the next one.